Okay, I'm going to start again because I just realized I was muted. All right, then welcome to the Blockchain Mastery Podcast. My name is Titi Onyison, and what we do here is we look into blockchain technology, the opportunities and possibilities for the future. Now, as with everything we do, we have to make sure that we go as deep as possible and learn as much as possible from experts who have done everything to do their research, know their onions, and of course invest in the opportunities therein. With the advent of blockchain technology, financial services institutions, they can now offer faster, cheaper, even more secure payment and settlement solutions to their customers. The technology has also enabled the creation of new financial instruments like digital currencies, and it's not really tied to any specific central authority or governing body or government. That is very important. Now, today we're joined by Bolu Abiodun. He is a senior reporter at Techpoint Africa. And while he reports on tech trends and innovation across Africa, he is renowned for his coverage of blockchain technology, where he has interviewed amazing stakeholders in the space. For instance, he's interviewed Tether's, that's USDT's Paolo Ardonio. He's also interviewed Nestcoin's Yele, Bademosi, and also Ray Youssef. Now, he's also known for keenly analyzing blockchain innovations like the $8.5 million backed Zone Network. From blockchain to finance and even deep tech, Bolu Abiodun is playing a major part in bringing key tech innovations by Africans to the global space. If you check him out on Twitter, or is it called X now, he's at Bolu Abiodun1, just in case you're wondering who he is online. And it's really great to have him here. He's standing by. Welcome to blockchain.
Thank you very much. Thank you very much for having me.
All right, then. Now, you are, of course, senior reporter for Techpoint Africa, and I know you must be really busy. Thank you so much for joining us on blockchain today.
You're welcome. No problem.
All right. So, honestly, I think it's important that we give some background to this topic. Really, blockchain in financial services. Blockchain is used for so many different things, but for those who are probably just hearing about blockchain for the first time, even though maybe it seems like they've been living under a rock, how do you explain it to them? What do you tell people who are just being introduced to blockchain for the first time?
Okay. Right. So I think the simplest way to define blockchain is just to define it as a way of storing data. Right. It's just a decentralized way of storing data. Normally, if you want to store data on your phone or you want to store information on your phone, um, you probably store it on an SD card or on your phone storage, and depending on the kind of information it is, it will only be on your phone and you're the only one that has that information. But for blockchain, the reason why they call it a decentralized way of storing data is because um, while you have that data on your phone, that same data, right? Someone else can, multiple people can have it on all their devices, right? But then it's not just them having it independently on the devices. Whatever happens to that information on one phone happens on every other phone, right? So it's just basically that makes it like very immutable, right? Which means that data cannot easily be compromised. So an actual example of that with blockchain, right, or with blockchain applications would be imagine you have a book, right, a ledger, right, where you write down the names of people that have probably taken money from a particular wallet, right? That book, you have like 17 copies or 30 copies of that book, right? Um, Once you write that, okay, Titi took 1,000 naira from the wallet today, it is written in every other book, right? at the same time, simultaneously. So as you're writing TITI, it's being documented in all the other books, right?
Mm.
So you now imagine that I also wrote my name. Polu took 1,000 rand from this wallet today, and for some reason I want to lie that I didn't take 1,000 naira, so that I won't have to pay back the 1,000 naira.
Mm.
That means I would have to erase at the same time. Imagine trying to erase 17 books, right? I mean, I only have two hands, right? And those 17 books are probably in 17 different places. One might be in Abuja, the other might be in France. And I have to make sure that if I want to doctor that book, I have to do everything at the same time, right? It makes it very difficult for me, right? So it's a way of storing data in multiple in decentralized places so that that data will not be compromised easily. I think that's like a really simple way of looking
Okay.
at blockchain.
So this issue of compromising data
Mm.
now, data, any type of data now, this is not just financial data. This is not just about money. This
Any
is
kind of data.
all sorts of data. So this is your names, addresses. This is medical records. This is votes for elections. This is
Mm.
real estate details, legal
Yeah.
details, contracts, for instance. All this information is considered immutable on the blockchain. And we've done what we can on blockchain mastery to sort of break that down to people in different ways. But we haven't gone into financial services that much. And that's because we needed someone who actually has done their research and, uh, been able to connect with people who have also even maybe built startups in this particular field.
Mm.
So for financial services, which is our focus today,
Okay.
um, how does blockchain work for them? Because in the end, it does feel like, from what you said, that all our information is out there. It's not in a closed space. So the mindset we've had previously is that having closed ledgers is more secure. Please explain how it's more secure to open.
Okay. All right. So yeah, you're absolutely right. You might think, okay, if all my information is in one single place, right, and that place is heavily protected, right, then I'm good, right? But because it's in one place, it actually makes it easier to be compromised. Um, if, for example, let's use the ledger example I used earlier. So there's that book, right? It's written there that I took 1,000 naira today, so I have to return 1,000 naira. So if it's just one book, it's just for me to find who that book is with, right? And probably find a way to steal that book from them and do whatever it is I want to do. But now that it is 17, right? And it has to be done simultaneously at the same time, it makes it harder for me, right? The only, and nothing is impossible, right? I think that's one thing people need to understand. While it makes it more difficult, it's not impossible. I could probably find whoever, all the 70 people holding those votes, and probably bribe them, call them, and say, okay, I'm doing this at 4 p.m. Let's all do it simultaneously at 4 p.m. But that's more difficult, right? So I think the idea that it being in one place is better. I think looking at it from that perspective, you see that it defeats the whole purpose of security, right? But now concerning financial data, right? I think I would like to start from the cryptocurrency side of things because yes, blockchain technology can be used for the other applications, but cryptocurrency made it popular. Cryptocurrency made us aware of the power of blockchain. So it's usually a really good place to start when you want people to understand how blockchain can be used for finance, right? So the whole idea from the beginning was that, okay, is there a way I can send money as easily as, say, I can send you um, a WhatsApp message or send you um, a file through Bluetooth, right? I mean, that's a very seamless way of sending money, right? No one needs to open an account, enter this, input this. It's very seamless. Sounds really nice. But the problem was that if I can share a file with you, right, easily by through Bluetooth, I can still retain that file, right? I will still have it. So if you do money like that, I can send 50,000 naira to you, but then I will still have 50,000 naira. And money shouldn't really work that way. 50,000 naira should leave my account, right? So the idea, what blockchain now did was, blockchain now stores the data of, okay, 50,000 naira left Bolu's account and went to Titi's account. Let's store this information, right? Blockchain stores that information, and it stores it in a decentralized way so that Bolu cannot hack a central computer and say, oh, I didn't send this money. It makes it difficult for Bolu to do that, right?
Okay.
So I think from there you can picture how it can help with financial services, right? Now, with just the internet, once you open like a Bitcoin wallet or a USDT wallet, which by the way, with non-custodial wallets, it's absolutely easy to do. Wherever you are in the world, as long as you have an internet connection, I can now send you money very easily. The whole idea with blockchain was, or precisely with cryptocurrency, was remove the middlemen to make things a lot easier and simpler for people, right? So yeah, it now gets more complicated, but
Of
you
course.
probably have further questions.
Yes, of course, because I'm thinking it does get more complicated
Yeah.
than that, especially when you want to talk about other use cases outside cryptocurrency itself.
Yes. Yes.
When it comes to financial services and blockchain, it's not
Mm.
just limited to coins or tokens, so to
Mm.
speak. So that's what I would love for you to break down now.
Okay. All right. So now with financial services, and I think a recent, I mean, not really recent, a company that uses blockchain for financial services, Zone, would be a very good example to describe um, blockchain use cases, right, in the finance space. So what they've done is using that blockchain, right? And then now I'll now bring in the concept of blockchain networks, right? For example, Bitcoin is a blockchain network, right? Um, so what that means is anyone within that blockchain network, right? I can easily send Bitcoin to that person, right? And to get into that network is very simple. All you have to do is um, download a wallet, right? It can be Trust Wallet, MetaMask, anything, right? Download it. Once you download it, you are given a wallet address, right? Automatically, once you get that wallet address, you are on that blockchain network, right? Anyone that has Bitcoin can now send you money. So it's kind of like the same principle. What they did was they created a network. That network will now have banks. It will have the popular banks, I don't know if I can mention names, not to promote.
Popular
uh,
banks, the ones that are domiciled in Nigeria, yes?
yes, yes, yes. So all these banks are now on that network,
Okay.
right?
So if
And
we
now,
were to use network now to break down networks, probably say like the MTN, the Airtel,
okay, okay.
yeah. If you use those,
Um,
does it work the same way?
no, 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 no. It's different. So when I say network,
I can't send data to someone. I can send MTN data to someone who has an MTN
mm,
line, but I can't
yes,
send
okay,
data to someone who has an Airtel line, right?
yeah, technically, so it's kind of like the same thing, right?
Okay.
So what I just mean is, when I say network, I mean like a group of people. See it as a group of people, right?
Okay.
A network of say a club, right? That has 50 people, right? And because you are within that club, you have easy access to those people. You can directly access them, right? You can communicate with them easily. It's kind of the same thing. So when you have all those banks, right, within that network, it now means that communication between those banks become very easy,
Okay.
right? The traditional way it's been done is you need a middle person, right? So say there's no club now, but
Mm,
there's Bolu, there's Titi, there's Emeka, there's Uche, there are all those people,
mm,
right? But if Bolu wants to talk to Titi, Bolu doesn't know Titi, right?
mm,
Because there isn't like one central network. There's one middleman, right? That will go to and say, oh, I want to give Titi 50,000 naira. Could
mm,
you tell her that I want to do that, right?
mm.
That person goes to Titi. Titi Bolu wants to give you 50,000 naira. Oh, okay. These are the information he needs. Send it back to him. That person sends it back to him. So it seems like it's there's some kind of friction, right?
Yeah. There's
There's
a back,
probably even yeah.
there's a back and forth.
Yes.
A lot of
So
back.
but because so what Zone now wants to do is let's remove that middle person, right? That middle person in the traditional way they usually call that person like a switch,
Mm,
right? So nibs, in transacts, there are different kinds of them, right? So once you remove that middle person, everybody can now communicate freely, right? Everybody communicating freely now means that if there are any issues, say internet connection or something, and a transaction didn't go through, because me and you can communicate easily, we can easily rectify those problems, right? Oh, I tried to send money, I was debited, but the person did not see it.
mm.
Um, those kind
Okay.
of problems has to first go to the switch. After going to the switch, it is then communicated with the bank and things like that. But because me and you can now speak freely, we can communicate freely. You know that, oh, Bolu, that money you tried to send me, there was an issue. You got debited, but it will be rectified immediately because on the blockchain also creates transparency. Because we can communicate freely, it also means that once there's an issue, once there's a transaction problem, a receipt is immediately generated that I can see, that you can see.
Okay.
So we don't need to start communicating and I'll say, oh, tell that person to tell their bank something. Or
Yeah.
the bank
Yeah.
sends their evidence. After my bank sees evidence, they, all those kind of
A
things. So
lot of
that is
back.
one way, yeah, that's one
Okay.
way blockchain is being used. And there are other examples. I don't know if you want me to
Yeah.
give
Just give
those.
us one more. Give us one more. One more.
Okay. Another one is I think JP Morgan, for example, right? JP Morgan, for example, created their own blockchain network as well, right? And then they created a token, right, um, on that blockchain network because they have a lot of institutional clients, right? Clients that move very large amount of money between themselves, right? But currently, those clients move large amounts of money between themselves over very long distances between countries. And then, the issue with cross-border transactions, for
Oh,
example. Um, and then because of that, most times we use Swift. And Swift is good, but with Swift, if I want to send money to someone in the UK, it might take 2 to 3 days, right?
mm.
And I'm sending large amount of money. It's not like um, me to my cousin, which could be faster, right? These are billions, sometimes millions of dollars, right? You can't really do it that way. You have to use Swift. So what JP Morgan did is, okay, let's create this blockchain network. And on that blockchain network, we would have a token that will represent the dollar,
Okay.
right? So our clients can use that token to immediately do transactions between themselves very fast. I need to send $2
Because
billion.
they're out. Because they're
Yes,
out. Okay.
exactly.
Yeah.
Right. So it's great. It's on the blockchain. It's immutable.
It's
It's very
transparent.
fast.
Yeah.
Yes. And then when the time comes and they've done all their transactions and they need to redeem that token for actual dollars, they now come to JP Morgan. JP Morgan now. But because these are businesses that need to operate very fast, they created
Yeah.
that for them. And, you know, I think it's been around for quite some time now. I think they started
What's the
working
name?
on it, I think,
What's the name of the
in
token?
2020.
What's the name of the token?
Okay, I can't remember the name of that token now, but it works just like a stable coin,
Oh,
right?
really?
It's a near anagram to like JP Morgan, actually.
All right. So the amazing thing. I was actually going to go into disruption and how this is disrupting traditional modes of payment, methods of banking from years past. And obviously, once you have anything disrupting something people are used to, payment systems and financial institutions, what they're used to, it becomes very challenging to, should I use the term market? Bolu, are you there? Okay, I think Bolu might have frozen at the other end there. But if you're just tuning in, you're watching and you're listening to Blockchain Mastery Podcast. My name is Titi Oyinson, and with me I have Bolu Abiodun. He is senior reporter for Techpoint Africa. And what we're talking about is blockchain in financial services. A lot of people have heard of blockchain technology, and they're just trying to probably figure out exactly how things work, and this is why we are here. We are here to sort of break things down, so that you have a better understanding of how this amazing technology is changing the world. Now, it's affecting various sectors of the economy, and it's rapidly evolving. And for those of us who don't have enough knowledge about it, it's one of the podcasts you should really stay close to. Every time we have a guest, we sort of break down how essentially this decentralized technology is tamper proof, it's transparent, and it's a system that is helping us keep record of transactions like never before. It's a game changer. It's being hailed as a game changer all over the world, and it's disrupting traditional banking models and transforming the way we do business. Now, with the advent of blockchain technology, financial institutions can now actually offer even faster, cheaper, more secure payment and settlement solutions for their customers. And some people are still on the fence, still skeptical about how it works. And as we've tried to break it down today in simple terms, there are new financial instruments out there, the same way the credit card, the plastic credit card came to be, the same way, you know, online payments came to be. It's the same way we're evolving today. Bolu is back, I believe. How's it going, Bolu? Bolu, are you there?
Fine, fine.
All right, then. It seems
I
like
had
we lost.
a device issue.
Okay. All right, then. So what we were talking about earlier on was about disruption, and then that was when the internet was disrupted. See what I did there? Um, but in terms of disruption, it feels like there's a lot of risk. If, for instance, somebody wanted to invest or start to build a startup based on this technology, it's a risk
Mm,
for in terms of it being accepted, universally accepted, because it is, of course, disrupting business platform, traditional business, financial institutions all over the world are going to feel the bite of it if and when blockchain technology is universally accepted eventually, possibly. I keep putting all those caveats in there because you just never know.
yeah,
So, because of this
yeah.
risk, um, how would you advise maybe a startup go about, using blockchain technology in their business?
Okay, so from what I've seen, right, there's a trend I've been seeing, and I think what the adoption of blockchain in the financial services sector will be more of, um, it will be more of like, how do I put it now? People who will use it will be infrastructure providers. So what will happen is you won't exactly see the people offering those blockchain solutions will not be the people you see, right, at the forefront, right? It will still be you'll still be see your regular banks, right? You still see them, but you won't really know what is powering, some of the new or faster or better services they're offering, right? But it will be a company, in the back that is now offering those services. And I've seen, a lot of financial companies investing heavily, right, in blockchain companies. Um, as of 2023, Citibank had invested about $300 million, right, in blockchain startups. right? And those startups are not exactly, going to come out and start offering financial services. No, they will offer blockchain infrastructure to people like Citibank, to the JP Morgans. You get. So
Yeah.
it's not going to be, yeah, it's not going to be like, oh, there's this new bank. This bank is using blockchain and they're going to make our lives better. It's going to happen in a very subtle way, unlike what we've seen a lot of people say. I know a lot of blockchain evangelists will argue with me and will probably say I don't know what I'm saying, and they'll probably get very angry because the future they imagine is one where the decentralization, right? The Bitcoin type of future, that will disrupt, regular banking, and they won't have banks anymore, and they won't need them anymore, and very large scale disruption. But that's not possible, right? It's not going to happen, right? Because, like you said, there's some risk to it, and we see it every day. We see it, whenever there's a new crypto scam and things like that, and people being able to do whatever they can. Because the risk of decentralization is, yes, it's good, it's fast, and trust me, it's incredible actually what these people that have built this technology have done. But then the risk is now that it's difficult to regulate. It's difficult to have somebody that can hold people to book, that can hold people to account, right? I can wake up today and decide to create a new crypto token, right? And launch it and make money off people, things like that, right?
Mm.
So it won't really go that way. It will go in a more controlled way.
Okay.
It will go in a way where it will be very subtle, like I said, and we'll probably not even know what is happening in the background. We'll probably not even know that blockchain is powering some things. And trust me, blockchain is already powering a lot of things, right?
It's already powering a lot of things under the table, and even
Mhm.
here in Nigeria, apparently there are some underground blockchain run financial institutions who are just keeping very quiet about it because of
Yeah.
the fact that they don't what they probably don't want their shareholders too aware of
Yeah.
the risks involved. But in the end, it is a basket of opportunities. But when I call it a basket, there are just too many holes in baskets for you to, be able to present it to everyone.
Mhm.
For instance, look at the issue of the blockchain halving, which happened in April. I'm not sure what people were expecting when the halving happened. I think this is the second or third Bitcoin halving to happen over the years, and
Yeah.
it was
Exactly.
halved for
Mhm.
different reasons. But even in the news right now, it says apparently blockchain block size hit a yearly low, according to um, this article I'm reading here. It says the network experienced a really significant decline in its average block size and transaction rates, and so it brought the price to about $64,100 at the time of this particular article being published.
Mhm.
Now, the drop in the block size, the measure of transaction data in each block, indicated that, as at June 7th or so, the network's transaction per second rate declined, mostly because of the halving. So I wanted to ask you a bit about the implications of the halving event. People didn't understand exactly what the BTC halving was supposed to be all about, and what it meant when they said it was going to be reducing the rewards to miners by about 50%.
Yeah.
All right. So
Okay.
let's see how you can break it down. Maybe you can break it down.
All right. So yes, it's, when you're already in the space sometimes, and you're all up in your head, and you don't realize that you need to break things down further for people to really understand. But yeah, the Alvin it's actually a very important event for Bitcoin, right? Just for Bitcoin, right? Not blockchain entirely. So the reason why is because the total amount of Bitcoin in existence should not be more than 21 million, right? And to make sure that happens, you need to make sure that you're only releasing a certain amount of Bitcoin, like creating new Bitcoin per transaction. So how is new Bitcoin created? Maybe that's where we should actually start from. New Bitcoin is created when, there are people we call miners, right? Think of them like actual gold miners. People who mine gold, they're the ones that, um, it's because of them that, we have gold,
Have access to
right?
gold, yeah.
So the Bitcoin miners is because of them that new Bitcoin is being created. But it's the process of creation that is now different from gold miners. So new Bitcoin is created when those miners are actually transaction validators. So what they do is their job is they're the ones in charge of that ledger I spoke about earlier. They're the ones that hold it, right? So what they do is when Bolu has sent money to Titi, they are the ones that validate that transaction and add that transaction to the ledger, making sure that no one can change the state of that transaction, right?
Okay.
So the process of them doing that, we can't go into that in this call. Even I'll probably need some mathematics professor to probably do that. But the
But
process of
but
doing
I want to talk. I want to sorry, slow you down just a little because we did already mention that there is no middleman, right?
yes,
And then once
yes,
you mention a miner, it
okay,
kind of feels like the middleman somewhere there, who is maintaining this ledger. So let's explain to people how miners are not middlemen.
okay. Not middlemen. Their job is just to make sure that there's a transaction coming through, right? Our job is to think of them as like someone that records transaction. Okay, me and you are doing something, right? I'm sending money to you, right? Someone needs to record it, right? Make sure that no one else can change it, right? So they are not really in between me and you, right? I don't know if that clears it up. They are not between the money that is going from me to you. All they are doing is recording that money went from me to you,
Hmm.
validating it, right?
Okay.
And what they do is they create a new block, right? Once they create, that's why they call the blockchain. Once they create that new block, right, and the new blocks are added whenever there's a new transaction. Those blocks cannot change. They can never change,
Okay.
right? In fact, changing one block means changing all the way down to the Genesis block, the first Bitcoin blockchain that was ever created. Right? Because you've disrupted the whole thing, right? There's a particular amount of Bitcoin in existence, right? And it has
Can,
to add up.
it can only ever be 21 million you mentioned. How many
Yes.
million Bitcoin have been mined so far? Do you have any
Um.
idea?
Okay.
Is it
So
up to
far,
5 million right now?
no. I think so far we are currently at. I'll have to check.
Hmm.
I think so far we
I
are currently at around
last
three
I
million.
checked was around, sorry, say again.
I think around 3 million.
Okay, 3 million blockchain.
Yeah. Bitcoins.
Okay, 3 million Bitcoin left before we hit our mark of 21 million, I think.
No, 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 no. Oh, we're actually very close. We're actually at 19. Uh, we actually have 19.7 million in existence now.
In existence, and it's still
Yes.
being mined every day. So that now
Yes.
takes us back to
Yeah.
the Bitcoin
So
halving that
still
we were
around.
talking about.
Yes.
So you said slowing down the mining efforts.
No, no, not really slowing down the mining efforts. Slowing down what miners earn after
Oh,
they validate those transactions,
okay.
right? Because they're the ones
Because
that create new.
yeah, transactions were getting a bit expensive at some point.
Okay. Okay. I'll get into that, but I just want to understand. I want people to understand the role of the miners, right?
Okay.
So their role is they validate those transactions. They make sure that the money I'm sending to you, right, gets to you, right, and they record it, right? They record that transaction. They validate it. Their reward for validating that transaction is Bitcoin, right? That's why they call them miners. New Bitcoin is created when they do that, right? So they are the ones that pump new Bitcoin into the, let's call it, the Bitcoin economy,
Mm.
right?
Okay.
So once they do that, right, new Bitcoin is created. So, but to reduce, right, because we are really close now, we're at 19.7 million, right? So to reduce the amount of Bitcoin that is being created, right, we now say normally we pay them 10 Bitcoins. Let's say, for example, we pay them 10 Bitcoins and whenever they validate the transaction. But now, because we don't want to pump too much Bitcoin into the Bitcoin market, because I mean, supply and demand. When there's too much supply, when the supply is more than the demand, the assets goes down. The value of the assets will go down, basically, right? So to keep the value of Bitcoin um, 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 at not so that the value of Bitcoin doesn't just crash, and to make sure that um, the generation of new Bitcoin um, doesn't pass that 21 million mark before the due date, they slash it by half every 4 years,
Okay.
right?
Okay.
Yeah, is
Yeah.
it
Yeah.
is it clear? Yeah.
It's connecting. It's connecting.
Okay.
So,
Okay.
but then why did that affect the transactions per second?
Okay.
Why do you think it affected the rate of the number of transactions being done?
Okay. So the reason why that happened is because now, um, me being a validator, right? Me being a miner means that I will not earn as much again, right? But then the cost is actually very expensive to be a Bitcoin miner, right? You need all this because you have to solve very, very, very difficult mathematical equations. I don't know, you must have heard about people talking about, how Bitcoin is bad for the environment because those miners need very powerful machines, right, that run on a lot of electricity, right? So it's very expensive to be a miner, right? So what now happens when after an halving is okay? It's costing me $10,000 to run my mining rig every month, right? Okay, but it's fine because I know that after every month, I will probably earn $15,000. So that's like $5,000 profit. Right? But now that the halving has happened, right, it's still going to be costing me $10,000 to run that mining rig. So what happens is I can't run this business anymore because it's no longer profitable for me. I can no longer be a Bitcoin miner. So I stop being a miner. So you have a good number of miners that will stop. When
Okay.
those people stop, we have less miners.
Mm.
Less miners means
Less Bitcoin.
less doesn't necessarily mean less Bitcoin, but it means less people to validate transactions. Less
Okay.
people to validate transactions mean transactions will not take longer.
Hmm.
Right?
Okay.
You see.
And nobody wants transactions to take longer.
Exactly. So that is one of the issues with the Bitcoin network. We've seen other networks like Ethereum, others that try to solve this problem, and more are still coming up. I think the latest one now is Solana, right? They've been able
Yeah.
to solve this problem. Yeah. So that mining, right? They call it a consensus mechanism, right? Consensus mechanism is the way where it's called proof of work in blockchain, right? That proof of work is what those miners do, right? And it's the way transactions are validated. So we now have new blockchains that are trying to look for new consensus mechanisms, right? That makes it easier and simpler and less expensive for those miners
Yeah.
to actually validate transactions.
Okay, so Bolu, you've done everything possible to break this down for us in as simple terms as you can, and we know it's a lot more complicated than that, but we have to appreciate
Yes.
you for
Mm.
doing what you can. Now, it's so interesting that you should mention Solana because we are aware of people that essentially ported from mining Bitcoin to mining Solana, and then of course there is the gamification of Solana now, where they've partnered with the likes of Telegram, and now people are tapping on their phones. Gamification of mining, essentially getting people to mine on their phones. So
Mm.
instead of having central points where There's energy sources to mine. They're using the energy on people's phones to do so. So
Mm.
there's a lot of things evolving in this particular space. I wish we
Yeah.
could talk a bit more about it. But your final thoughts, just give us your final thoughts for where blockchain and financial services is going in the nearest future.
All right. So for me, I think it's I've said it before, and I don't think it's going to change. Where blockchain is going to, um, help. Where blockchain is going in terms of financial services is it's going to be an infrastructure where current or existing financial services companies will now leverage. Right? It's going to be like a foundation, financial foundation for existing finance companies to leverage, right? They will build services on it, and it will happen, like I said, very softly. And the average person on the street will probably not know that it's blockchain that is powering what they are doing, right? So it's going to make it look as if okay, maybe blockchain isn't that important, that instrumental, but no, it doesn't really take away the importance of blockchain, and I think it's something people need to start thinking about now. Stop thinking too much about the technology. Stop focusing too much about the technology, but focus more about what the technology can do and the people that will use that technology.
Thank you so much for joining us today. We've been speaking with Bolu Abiodun here, senior reporter from Techpoint Africa. Thank you so much for sharing. There's still quite a lot for us to talk about, and please, as soon as you have free time, just connect with us one more time and let us know so we can keep the conversation going.
All right, no problem. Thank you so much for having me.
All right, then I'll be connecting with you on LinkedIn in a little while, and of course, you can find him on X as well. What's your handle on X?
Bolu Abiodun one. Just search for Bolu Abiodun. It's
All right,
pretty easy to find. Yeah.
all right, then have a great day.
You too. Bye.
Okay, then. So, yeah, so our conversation today has been all about how blockchain in financial services can be, well, essentially helpful or add a unique edge to startups and young small businesses. Now, the Bitcoin halving, when it happened in April, there was a lot of anticipation. In fact, there was a major rally before it happened that created quite a bullish period, and it was exciting. There's a lot of it's been dulled down a little bit now because of the fact that people have sort of shifted to Solana. And now, if you want to get more information about all this information is all out there. You just have to do your own research. As we like to say on blockchain, is DYOR. Do your own research. Don't take our word for it. Go out there and do some reading. Let me just give you the news update before I go. Let's see. What do we have here? Okay, so it's very simple. When it comes to the blockchain halving, we've talked about that already, but Fox News and Time Magazine are using blockchain to combat fake news. We did mention earlier on that blockchain technology is being used for so many different things. And if you can use it to combat fake news, why not? Now, Fox is not very popular in this part of the world, but it is popular in the Western world. So let's see what they're saying here. Now, Fox's Verify protocol is set to transition to its own zero-knowledge blockchain, enabling developers to create authentically provable projects and content. So Fox Corporation and the global media brand Time have partnered to use Fox's Verify protocol to make the content licensing and verification immutable, meaning you can't fake it, essentially, and you can't delete it. Now, this collaborative effort aims to ensure journalism's authenticity and combat misinformation in the press. Mark Howard, that's Time's chief operating officer, emphasized this goal, and he said, Time is proud to join Fox's Verify as an authenticated source of fact-based journalism. Now, it's at a time when access to trusted information is more important than ever, and they revealed that Time will be the first external publishing partner to use the Verify protocol, and they're working to integrate blockchain verification into journalism. Just imagine that. Who would have thought? Now, Melody Hildebrand, Chief Technology Officer at Fox, expressed enthusiasm for this partnership, saying that they found a partner that shares AI optimism and brand equity and authenticity while delivering their content in new and meaningful ways. So let's just give you a little insight onto what Verify is actually about. So Verify was launched on Polygon's proof of stake network in January. It uses cryptography to sign and establish the history and origin of digital content. The protocol establishes a technical bridge between AI, that's artificial intelligence platforms, and media companies, verifying over 300,000 pieces of content across Fox. So, yeah, if we can use it in journalism, yeah, where else can blockchain become impactful in this time and age? There's so many questions that we hope to answer with you on Blockchain Mastery Podcast. It's been a pleasure being your host once again. Now, if you would like to be a part of the next episode or subsequent episodes of the podcast, please just reach out to us. It's very simple. Just send us an email. That's dynamitepodcastnetwork@gmail.com. Dynamite Podcast Network at gmail.com. All right, then, everyone.